Hello and welcome to Wall Street Reporter. Andrew Packer, senior editor here. I'm joined today by Frank Holmes. He's got an impressive resume. Currently, he's the CEO of US Global Investors. He's running 8 mutual funds, 2 ETFs, and it's in a lot of areas that small cap investors will be interested in. We'll talk a bit about Hive blockchain technologies. We'll talk about some of the gold and silver plays and ideas there that he has and how that can all tie in. Frank, thanks for joining us.
Well, it's great to be with you, Andrew.
Yeah, great to have you with us. I definitely want to start with kind of these big trends. It does feel like 2021 is kind of starting to kind of pick up where 2020 left off. What are you seeing trend-wise into this new year?
Well, at US Global, in all our perspectives, we write that we believe that government policies are a precursor to change. So we monitor fiscal and monetary policies. And what's interesting is that you can actually capture most of it and get rid of the noise. When it comes to monetary policy, you follow money printing and real interest rates. They have a big impact on gold. They also have a big impact on people looking for dividend paying stocks. And then on fiscal policy is tax and regulations, are friction on the economy and spending. So if spending is going to go for this year into green energy and green everything, then those categories and those industries will have a great run for the next 4 years. It's trying to understand that. But what to me is interesting is that for the past 20 years, gold has been up 80% of the time. And most of the time, Wall Street media is negative on the world of gold. And I'm a big believer that it has to do with this experiment, which is growing MMT, modern monetary theory, is being practiced differently, but is being practiced by the G20 finance ministers.
Yeah, I mean, that's an interesting point because I remember sort of growing up, I'd be reading like editorials in Forbes, and Steve Forbes would say, gold is a barometer for kind of the monetary system. And he was kind of worried about it when gold was 400. Now it's 2000. 2020, we saw the M1 money supply surge 35%. I mean, there are just these big, massive kind of things going on even before we've gotten to the official MMT, like what Andrew Yang was proposing during the Democratic primaries last year.
Correct. And in South Korea, they practice it in small communities, but you could only spend on like where Groupon would be, coupons, only with small local businesses. You couldn't buy food at McDonald's with the money they gave you, only local. So it's been experimented everywhere. The Federal Reserve did something unprecedented where they dropped interest rates, but actually the mezzanine funding and the rollover of muni debt and corporate bond debt actually stayed and went up. The cost of capital went up during the crisis. So they came in and started buying ETFs, and they used ETF as a channel to get the cost of capital down. So muni rates fell, made it easier for municipalities and states to roll over their debt, and corporate debt fell, but they didn't buy the individual names, they bought through the ETF mechanism.
Right. It was sort of that shotgun approach of we're just going to protect everyone because there's a crisis. And now that they have this, kind of tool in their toolkit, they're probably going to use it more and more and more with really no incentive not to anytime there's a potential crisis.
And countries like Switzerland, they go print this money at a negative real interest rate, and no one's buying it, so the bank buys it. Then they go buy Microsoft and Apple stock because the dividend yield's higher than what they have to pay to service the debt. It's unprecedented, but I believe that the G20 central bankers, who usually live longer than prime ministers and presidents in their power base, they have their own cartel or country club. They meet often, and so it's a collective world event that they're all printing money. That's not one country versus the other. And so I'm a big believer that that's why you're going to see real assets. Your real estate's up more than 10%. It's a bogus that inflation's at 1.4%. If you used the CPI algorithm used in 1980, inflation's at 9%. I relate to my cost going up. Food is up. All the commodities are up. Lumber's up 40%. Take a look at Home Depot if you want to try to buy lumber. It's a shocker. The sticker for the costs are. So I think we're going to see this going into next year, that this allocation of capital is going to look for where capacity to pay dividends or free cash flow. And that's what makes gold stocks most interesting in this past year, because it's the first time in over 10 years they had a free cash flow yield. as a group of 100 gold producers we track. So I think that they lend themselves to gold can go up 20%. It's a normal DNA volatility over 12 months. But these gold stocks then can go 40, 60%. So I sort of like that path. And US Global Investors is public. It's a NASDAQ stock as an investment advisory, just like Wisdom Tree is. And our ticker is GROW, GROW. Well, we've always traded off the gold. And gold's going up, and all of a sudden we would trickle up, etc. But this past year, it's a big change because we have a phenomena happen with JETS ETF. I mean, this is markets crapped out. It collapsed. I was worried about it lay off people, and all of a sudden it gets discovered by millennials, which is very important because this is like the 90s when baby boomers discovered mutual funds and tech stocks. Now the millennials are discovering ETFs and stocks, and that's price discovery. Once that happens in the ecosystem, then come in the barracudas and the sharks and the whales and the groupers. It's a complete ecosystem now.
Right. And not even the stocks too, but even the options. I was reading a report today that said that options trading volume in 2020 was something like 60% higher than 2019. It was just another explosion in growth there.
In unexpected. And the big beneficiary of that was gambling. The casinos are shut down. Sports, there's nothing to bet on. So you have people that are like with Barstool, he's got his big following, and Dave is playing stocks and ETFs. And I remember in June, he said that he thought Buffett was wrong. He's a great investor, but he's turning 90 soon, and he's missing that the airlines this has always been a big turnaround. And all of a sudden we have this deluge of all this new volume coming in, which is really important because you had guys who are shorting airlines that use this as a hedge. You have other people playing day trading because the volatility is big. Then you had other people playing because of tactical, that historically after every crisis a year later, the airlines bounce back 80 to 100%. So it's grown with that.
Right, but Buffett sort of has a fundamental point when he talks about air traffic levels taking years to recover. We've seen these holiday numbers are about 20 to 25% of 2019's holiday numbers. Like, there is certainly a case to be made there, but also you haven't had the market support with the Federal Reserve slashing interest rates to zero. You had the fiscal policy, Congress just giving the airlines money to kind of tide things over for a few months there. So, kind of balancing these factors, it does seem like there is a case still for the airlines. How much higher do you think they can go in the coming year?
Well, if they get back to where their levels are, it's another almost 40% move with zero interest rates. That's pretty attractive. As a speculation, the TSA started reporting at the very bottom. It's fascinating to me, this data of how many people they clear every day. And it was averaging 2.7 million. 2 million people domestically flew every day in America, 700,000 coming from Asia, Europe, and Latin America coming in. And that crashed to 90,000 in April. Now it's back to 1.3 million, and the bulk of that is domestic, and the bulk of that is not business travel. They're zooming it. It's predominantly people, tourism. So the big airlines have reconfigured their flights. They're no longer, you have to go through a big hub. They're flying from Pennsylvania right down to Fort Myers, Florida, anywhere the snowbirds want to get to, even from Phoenix to Cabo San Lucas. Southwest Airlines is flying now. That never happened before. So they are adapting, and the tourists are really big in sort of the big turning point here for the move.
Definitely makes sense. And it's probably a trend we might kind of continue to see for a while too. I think that hub and spoke model, it worked very well for massive amounts of air traffic. But if, like you're saying, only 20% of people are going to be on a plane, I mean, I've flown in the past year. I mean, I've had several rows to myself. It's like flying private. I'm not complaining at all, but the pricing also seems pretty low too. I don't know how the airlines are even making money accounting for fuel costs.
Well, interesting. Their ancillary revenue, when we first launched Jets a little over 5 years ago, it was the ancillary revenue which is growing at a 25% rate. Credit cards, charge you for change your seat, charge for baggage, charge if you want to even phone up and ask something. It became bizarre, but that ancillary revenue grew dramatically, and it really offset. So that I think they've been much more flexible. They've been able to cut back what they've been able to do. And Jets ETF, it also has a lot of airports. And what we noticed was that the airports in Mexico, which are listed on New York Stock Exchange, Beijing, Singapore, Paris, they all picked up. On a relative basis, they had stronger financial metrics. So what that was just another reflection of people, it's tourism that's flying. We have to get back to 2 million. We're vacillating up and down between 1.3 million and 1 million people is that number. And I think as we go to a new high, like 1,000,004 people fly a day, then the Jets will have a new high.
And I think you're also going to reach a point where you're going to be covering those costs that you need to cover, and they're no longer going to be too worried about kind of the financial issues that they've had. There's been some talk about some of these big airlines maybe going bankrupt or merging, but we actually haven't seen that yet. And if we haven't had it by this point, it doesn't look like that's going to happen.
I totally agree. And what's happened is that the governments around the world, particularly the US's leadership here, has recognized that they have to really support the airline industry, because if they start furloughing and cutting everyone and the economy turns, well, what happens is that everyone has to get onboarded again to fly. The training is so great to be a pilot or to be even an airline stewardess. There's so much skill training they have to and certification they need. If they give them checks, keep them working, then when the economy turns, they can turn in a second, because the airlines industry is almost 10% of global GDP. That's a mind-boggling number, indirectly and directly.
Absolutely. And it also seems like a lot of those jobs are not going to be easily automated. Like, somebody's still going to want a human pilot on that plane. You're still going to want, some human flight crew members to interact with, even like ground crews, making sure everything is just kind of verified, checklisted by a human. Like, people want that level of trust.
And Andrew, I've done one flight and I was so impressed with Delta. And it was actually to an Agora event in Salt Lake City. It's a nonstop from San Antonio. It was spotlessly clean. They were showing me how they were fumigating it at the same time, almost steam cleaning and going into the pockets. It's cleaner in airplanes than they've ever been before. It's cleaner than buses or any other type of transportation. So I think they've done a great job. I know your experience when you flew, wasn't the plane much cleaner?
I think so. I mean, kind of American domestic flights, it always feels like you're kind of flying on like a bus. It's not like this full big luxury international flight experience, but felt cleaner. And I know they've been putting in like UV systems into the air to make sure that it's recycled and the germs are being, killed much more quickly.
So that's,
I think definitely I would say it was cleaner.
I think that we all have to be contrarian. Like what's the negative news today, on yesterday, markets are up today. Who would ever think all the drama that took place in Washington today, markets should be crashing, the world, it's all this negative narrative, etc. Markets are up. So I think one has to really look at the world differently and see where money is actually flowing to and what it's flowing to. One of the big things I found in this cycle is look who's hiring. Whoever said they're hiring in this cycle, their stocks are all up dramatically. Chipotle hired 10,000 people. Because they had approved, they had really had the best takeout delivery service. California Kitchens goes bankrupt. They didn't have that system. Amazon, it says, is hiring 100,000 people in April, and bingo, that stock is on a tear. In China, a stock that's on NASDAQ, Pinduoduo, it's been on a phenomenal run. Why? They're hiring people because to meet the supply. They're like the Amazon, Whole Foods, food delivery, very inexpensive for the rural area. But it's you have to think contrarian. You really do. So most of the people don't get gold as an asset class, but gold is chugging up. And I've done this analysis that on the last cycle and the previous crisis, if you look at how the Fed's balance sheet expands and how much debt they bring on, that at 3 years out, gold doubles from this level. So I've been saying that I think that gold can reasonably be at $4,000 in 2 years, that this cycle is going to cost $10 trillion to weather through. The last one was $3 trillion. And so I remain very bullish, trying to follow the money. And I think that Ray Dalio, who's the biggest hedge fund in the world, he's also been an advocate of gold at 10% weighting and rebalancing for him once he rebalances them often. But I think for investors should have a portion called the golden rule, 10% in gold and rebalance every year.
That makes sense. Going back to your point, kind of just on kind of what we're seeing. We've seen some chaos kind of in Washington D.C. the past 2 days, and what's fascinating is the fact that the markets are up. So I think there's a key point to be made that any sort of crazy political situation that's going on, as long as the printing press is going, and as long as people feel like, hey, we might get more money or another stimulus check out of this, like the market's fine with that.
Yeah,
and then. And then in terms of just conventional wisdom, I always kind of, sort of grew up following a market where a stock would go up when a company announced that it was cutting jobs, because it would be cutting costs, it would be trimming the fat, however you want to justify that. But, now I'm not saying we're in like a new economy, but we're now kind of realizing when you're growing and you're actually hiring people and there's genuine growth there, that's why your share should go up. And I think a lot of today's investors are realizing that's a better way to invest than in a company that's just kind of looking to cut costs.
Correct. And I also think microcaps, coming back on stocks because of this whole economy, a lot of those microcaps are much faster at moving and adapting. They don't have legacies they have to move around. And so if you're digital, you're much more able to agile and to be able to pivot. If you're a micro cap in business, you can pivot more quickly. So I think that's where there's opportunities in the marketplace.
Yeah, and we will get to some of those in a little bit. I do want to kind of change tack a little bit, just to mention the fact that you're listed as the interim executive chairman of Hive Blockchain, one of the few kind of publicly traded ways to play cryptocurrencies on the financial markets without having to open sort of a Coinbase account or BitChute or any of those places, and kind of buying that directly. So let's talk a little bit kind of on the crypto space. Really interesting, this $1 trillion market cap they've now gotten to this week. Pretty big milestone.
Well, it clearly is. The ecosystem of crypto around the world is amazing. But what happened with the genesis, the creation of Hive, was I was trying to launch an ETF. And I quickly recognized that the SEC and the legal bills, et cetera, they just weren't going to do it because their concern was anti-money laundering laws, that they didn't want to find out some hacker got paid and those coins ended up showing up at the New York Stock Exchange. The same thing I went to see in Canada, the Ontario Securities Commission, same thing. Great concern on anti-money laundering law rules and compliance, et cetera. So I had this knowledge, and friends contacted me regarding mining. And when you validate a transaction for Bitcoins every 10 minutes, when you validate that, you get paid in new coins. Now this year, those number of coins you get paid halved, but it was the process that that coin is called a Genesis coin. It's a virgin coin. It's no AML problems. So I said, okay, that US Global, rather than trying to launch an ETF, we're going to co-invest and start this company called Hive Blockchain, and I became the independent chairman of the company. Subsequent to that, I ended up becoming the interim CEO and went through a bit of a proxy battle with the largest shareholder. I just couldn't get the transparency we needed. We fixed it all up, and last year it outperformed Ethereum. We're the biggest mining industrial scale miner of Ethereum. We traded 2.5 billion shares. We trade over the counter of the US. I think we traded 500 million shares last year. Traded 1.6 billion in 1.7 billion in Canada, and then we traded in the German market. So it has become a proxy for institutional and retail investors that did not want to go to a Coinbase to open an account and have a wallet. So because we always keep some of the coins, and we sell enough to pay the electrical bills and some of the jobs and service providers we have, but it's really a very lean machine. And we are about 2% of the Ethereum world, and Ethereum actually outperformed Bitcoin last year. Bitcoin gets all the interest, but Ethereum was up 460%. Bitcoin was up a little 320%. So for us, our margins exploded. Now at over 1,100 for Ethereum, our costs are less than 150. It's a high gross margin business. So we announced that this turnaround in the summer, that we had these great earnings, great cash flow, basically run by 3 people. And we're thrilled about it, how it's grown in its capacity. US Global, at the end of the year, sold shares and then reinvested the company so it could fast track the acquisition of more equipment. And we did it through a convertible. What that did is it saved the company a lot of money. We actually did it at a premium to what the stock was trading at. And when it gives us still US Global, with it, as I said earlier, is public, it gives it its Ethereum Bitcoin exposure on the upside. But for the investors, it allows us to announce that we fast-tracked our growth profile. So we're thrilled about it. We've delivered the most revenue and cash flow of all the other miners that are out there. We see that a lot of miners now are issuing shares and raising money and announcing acquisition of equipment that's not going to come for another 9 to 12 months. But there's been huge dilution of their revenue and their cash flow per share. So we're, as I guess a fund manager, more conscientious of trying to really manage that we grow the business faster than we issue shares.
I mean, that can be tough with any startup, and that's one of the bigger challenges with like a micro cap company, since that's a major source of funding, and they will often need to tap into that funding.
Yeah.
So, and totally. I love that you're in the Ethereum space. Also, I always tell people, Bitcoin's sort of like gold; it's sort of the one you kind of want to hold long term. Ethereum, I think, actually makes more sense, like transactional, if you're going to use it as a monetary substitute. But
and it's a much bigger. The smart contract has. What's going to explode this year, it took off last year in the second half, but it's going to be massive this year, is DeFi, decentralized finance. The creative ideas there are just mind-boggling, of taking what used to be securities and capital markets and just saying, okay, we're going to reinvent all this, but only in crypto. And give you securities lending with Ethereum if you want to go short or long. Now Fidelity is giving you margin on your Bitcoin. You can deposit with them, and they'll give you, just like on stock of owning any gold stock you want to go, they'll give you margin on it. Well, they'll do the same thing here. So I find that fascinating, and PayPal now taking it. So it's going to grow. DeFi uses Ethereum. So what happened last year in the second half is that they basically took out of the ecosystem 3% of all the Ethereum. And now we're going to what's called proof of stake. And to do that, you have to deposit your Ethereum. You never get it back. You get a monthly yield, but you never get that Ethereum back. They took out 1% in the month of December of all the Ethereum. Now it's probably going to be pushed to 2%. So unlike Bitcoin halving that helped Bitcoin take off, the supply being restricted, I try to tell people, if there's 100 million ounces of gold produced every year, and all of a sudden there's only 50 million ounces, gold will go to 10,000.
Right.
That's what happened with Bitcoin. The amount of supply halved, and Ethereum is going to shrink because of the growth in DeFi needs Ethereum as its backbone platform, and the growth in proof of stake. So I think the mining business Ethereum is going to be phenomenal for the next 3 years.
So, I mean, sort of like gold and silver in a bull market, silver is going to be the outperformer. It's the lower cost one. It seems like a lot of the same kind of factors are in play here.
Yes, it's a very good observation. That's exactly it.
And what about kind of some of the smaller coins? Obviously, when there's a big rally in any asset, people will get drawn towards kind of the smaller and less expensive plays, and try to, hopefully capture some of that fear of missing out they might have. Is there anything kind of in there that you're looking at?
Yeah, we like at one time we did a lot of Ethereum Classic because the margins were higher, but then you become too big. When you have 20 megawatts of juice and you have 1 million of these chips running, and on these rigs I have 13,000 of them going 24/7. All you have to do is put a couple megawatts, and all of a sudden you own too much of that coin. So we have to be so careful, because that's what we found with Ethereum, that we got to be very ginger. We cannot go and put 20% of our energy and our chips. But the big thing that's interesting, I'll share with you, that it's been a crisis for us, because in solving this problem quickly, is for Hive. We find out in August that most of the world processes what they call the DAG file. It's a long piece of lasagna, and it has all the information from that blockchain on there. Well, it's getting so big that 4 gigabyte memory card just not going to work by the end of February. So we have been selling cards, buying them, trading back with China, and now we're through about 60% of our facility has been reboot it with 8 memory chip cards. And so hopefully by the end of January, we'll be at 90% of this repositioning. We've done it inexpensively, but it's really hard to get chips for our size because that's a big industry player. So we're looking at doing our own sort of go to the foundries directly and build our own special card. We're exploring all these avenues, but we have upgraded. So what's interesting, why this is important, is because when Ethereum takes off like this, everyone comes in to start mining it. If they don't have an 8 gigabyte card, they're not going to make any money. So then if they don't have the money to buy them, and can they get them and source them, is very, very hard. They're sold out. So I think we'll be in a sweet spot that come March and April, that the difficulty will fall and our margins will grow.
Always a good position to be in. Plus, it sounds like you're ahead of the curve on kind of having that latest, mining power that no one else is quite there yet. So.
And during COVID, I'll tell you, it's been a real issue on moving workers back and forth throughout Europe, getting equipment from China. I do see the unexpected consequences of COVID on logistics, and the cost of shipping is double. It's up 100%.
Yeah, that's been a big issue. And you've had companies like FedEx who've been talking about delays and how it's not necessarily on their end. So that absolutely makes sense. Kind of looking at the mining kind of operation, it seems like the days of kind of the individual miner are just not even going to work anymore, just operationally. I remember the last big bull run in Bitcoin, people were talking the electrical costs involved, the amount of processing power you needed. Has it really just become an institutional kind of asset to develop at this point?
I think so. Just the CapEx and logistics you have to go through. But what was really important for Hive is it's only using green energy. And our software allows us, in fact, in Sweden, that during peak periods to drop our use of energy, and the hydro company pays us. So we're still making profits during that period, but we're helping them because it saves them a lot of capex. So we can turn on a dime with software of moving our use of energy. They can't. And they would have to spend billions and billions of dollars of infrastructure to deal with those peak periods. So we're helping the electrical companies, and we're looking at right now taking the heat. Think of in our facility in Sweden having 100,000 hair dryers. How loud that is, and all the heat coming back from them. Well, we're going to create a greenhouse, and that greenhouse is going to grow vegetables, and therefore it'll drop the carbon footprint from getting fruit and vegetables from Spain up to Sweden. And there's all these credits you can get in Europe to anything that you drop that carbon footprint. So everything we've touched so far, we've said we've walked away from deals unless it's green energy.
So I mean that's a nice combination too, since there is such a huge push into that like socially conscious investing and just kind of divesting away from fossil fuels in general.
Yes, and ESG has become very important. You can see fund flows in ETFs. If they put that ESG ticker on it, all of a sudden it gets more fund flows. It's really critical. And I know for our Global Resource Fund, we pivoted a year ago to way under have a position in all the big oil companies in that quant approach and only look for alternative energy. And we far outperformed any ETF and resources or index because of that pivoting, but also a quant approach for picking the stocks. And talking about that, solar energy. All right, solar energy, guess what they need? You talked about it earlier, lots of silver. So silver, the whole green movement is going to be extremely bullish for copper and silver.
I think a lot of the rare earths too, even things like tungsten. I mean, that's definitely, all of these plays, even lithium for electric vehicles. A lot of commodities, people are not necessarily thinking 100% about these plays, except for some of the big names. And there's a lot of smaller names out there. And that's in a pretty good spot to be in. But yeah, I mean, I got solar panels put on my roof.
Nice.
But I live in Florida. I get all this sunlight. Not a problem. But when you're trying to mine cryptocurrency, you actually want to be in a place where it's cold to kind of keep your heating and cooling costs down, just because everything heats up so much.
But in Texas, we're looking at an expansion, and they use liquid coolant. So it's like having a radiator for your car and air conditioning. So you can get such inexpensive electricity at 1.5 pennies. Like our cost of electricity in Sweden is 1.5 pennies. I mean, that's really inexpensive. But you can get that from natural gas here. And so there's a surplus in Texas because of solar is all through the Panhandle, all through West Texas. You see nothing but huge wind farms and solar. So it's basically dropped the cost for any energy bill. And then natural gas, it's so inexpensive. So you can get really cheap, inexpensive energy. So therefore, it costs a little bit more for liquid coolant. It's still cheaper than trying to go to other states.
I mean, and natural gas, look, you're clean burning. So, I mean, among the fossil fuels, that's one of the best places to be in. I think nuclear power is something we should be investing in more, but, that's kind of a regulatory, and the startup costs are so high that, people are looking at solar and saying, okay, this makes sense now kind of on a cash flow basis.
Right.
So a lot of opportunities kind of in all of those spaces too. So I mean, we've talked sort of big picture on gold, but maybe let's drill down into it a little more. I know you're a fan kind of more of the royalty model, where you're going to invest in a company that in turn takes its capital, invests in a number of different mining operations. What are kind of the pros and cons of that versus maybe like a small cap miner that's just got 1 or 2 mines?
Well, I think the nice thing about royalty companies is a superior business model. It just is a superior business model, and for simplicity. If you look at the average revenue per employee that Newmont has, so it's $500,000 of revenue per employee. Franco-Nevada has royalties on Newmont and Barrick's Nevada operations. Their revenue per employee is $24 million. Goldman Sachs is $1 million. So you have this called the efficiency ratio is so much greater, and that royalty is like anything that has a royalty business or recurring revenue, like you have for Microsoft when they went to not trying to market a new software, but it was all SaaS model. And that SaaS model always get higher multiples. So that's another reason for the royalty companies. It relates more to non-gold investors. It relates to that financial analyst that's really focused on financial stocks. And so I think that's why that model. So we launched an ETF called Go AU. This is on New York Stock Exchange. And it's 30% of that were the 3 big royalty names. And they recalibrate each quarter. Because each quarter, you just don't know who's going to win that quarter.
Right.
And each of those have many royalties. So they actually have a portfolio of 100 names. So you really get diversification within that. And then the other ones are quant driven, because what we noticed is that those companies that have revenue per share growth each quarter greater than the price action of gold and have EBITDA that's also higher than what the change in the price of gold that quarter, they outperform by wide margin. And a lot of times you can't get a big basket of these names. And to have a mutual fund or an ETF, you have to have at least 21 names. And out of the 100 gold stocks we track around the world, it became very difficult. So what we found with GoAU is that we have 3 names are 30%, and then it's 25 names that are very caught up on who has the strongest revenue per share and cash flow per share, or are the biggest discount to enterprise value. So if something happened that quarter and they got sold off, they usually get a bounce. So we back tested about 8,000 hours of what factors work. And it's very different than the normal gold analyst looking at discounted cash flow of NPVs, et cetera. But we know we can outperform it, and that's what it's done. And it outperformed the GDXJ 90% of the time over rolling 12 months for a decade. So that's what we launched, and is doing that. So what we're seeing this year that's so important for gold stock investors, it's the first time in over a decade that the 100 gold producers had a free cash flow yield that was positive. Even December of last year, it was negative. It was in March with COVID that all of a sudden it took off the free cash flow yield as an industry. If you focused on growth in revenue, growth in cash flow, and have a free cash flow yield, those stocks will perform. So we're very focused on picking those each quarter. So even though it's passive, it's really, to me, much more dynamic because it recalibrates every quarter.
Yeah, I mean, it's also fascinating too because gold had this big sell-off in March with everything else. It was a little closer to the end, which felt a little more like some people trying to meet some margin calls and having to take those profits off the table. And then, with declining energy costs, it seems like gold mining is just really in a sweet spot right now. Because you've got the monetary conditions are perfect for it. If your costs are going to be kind of the same or going down, if you can figure out kind of how to automate some of the labor and the heavy work out of it even more, great. It just seems like there's a pretty good trend there. But then, of course, we're also looking at these trends where all of these big gold finds, 50 years ago, like we're not finding as much today. We're not getting that replacement value that we are today. And it's
very good observation. Yeah. Supply, it's peak gold.
Yeah, and it did seem for a little while that we were seeing a little bit of some kind of strong merger activity in the space, and that's kind of stopped now because it's like, okay, we're on a bull run. Let's just kind of all see where everyone ends up. What kind of trends do you see kind of continuing here?
I think that if anyone has a significant discovery, they'll get bought out if they're in a safe jurisdiction. I think there's much better discipline by boards of directors and CEOs not to do acquisitions which are non-accretive. There was just this thing idea, but our revenue grew and our cash flow grew and we have more production. Yeah, but on a per share basis, it's half. Guess what? Those stocks did not perform. We can do all the quant analysis to show anyone. So I've been speaking to all the CEOs. There's the Denver Institutional Conference, all the gold fund managers, and walking through that boards have to be more responsive, that don't do deals which are non-accretive. And so I think we're seeing better discipline. Interesting enough, Warren Buffett never bought a gold stock till past year in August, showing up buying Barrick. Guess what? Barrick's got free cash flow yield. Newmont is a free cash flow yield. So those stocks that are having that, they attract non-gold fund managers. And you can see that 20% of the S&P after March of 2020 cut their dividends because they lost all their free cash flow. And the S&P 500 as a whole went to a negative free cash flow yield. Gold stocks went to a surplus. So I think we're in a really nice spot for gold stocks. And my micro cap, your small cap fine, I love things like Grand Columbia. And another one that they had a gold notes, they're probably, I think, going to buy them out. They got a company called Caldas. It's listed in Canada. It's a small gold producer, but it's going to go from 24,000 to 150,000 ounces over the next 3 years, fully funded. But they have gold notes and they pay 7.25% paid monthly. And as gold trades above 1,400, they give you bonus payments. So money market funds at negative yields or next to nothing, it's an attractive piece of paper. And as a gold fund manager, having 2% of our funds in those types of piece of paper, they actually improve our performance because when gold corrects, they don't go down. And as gold rallies, the yield starts just rising and you get paid these bonuses.
So, I mean, that's an interesting spot to be in and one that's definitely off the radar if you're just looking to get into gold and you're just looking at GLD or one of those big players, the Barricks of the world. So absolutely some interesting points there. So we've kind of talked about areas that, look kind of the most attractive to you right now. Is there anything that looks unattractive? I mean, we've got stocks at all-time highs. We've got valuations, price to sales, price to earnings, those conventional looks. It's pretty high. The big, I think, justification is people are just going to keep printing money. Interest rates are going to be zero. So why be in bonds?
I totally agree with you, but you can see this bifurcation in the digital and technology stocks because they're showing that revenue per share growth. And that's the real important part of that portfolio. And once a company's last quarter falls below the average for 4 quarters, it gets put in a penalty box very quickly. Micro cap to big cap. So that's an important metric for anyone that's looking at these stocks is, are they demonstrating that? And so I'm bullish there. Very bullish on for a long time. It's just tough for U.S. global because the gold funds just were not performing, and gold was a terrible asset class. And my ETFs were dormant basically at $100 million. But today, it's significant. Jets is up to 3.5 billion. Well, that's an extra almost $20 million of revenue we never had a year ago. And I've not increased my costs, so grows in a very, very explosive growth revenue and growth in cash flow and free cash flow during this run. And then we now have crypto. So I think you can find those sort of micro cap stocks that can show that. I can explain growth because I'm CEO, right, large shareholder. But when I'm looking at other companies, I'm finding that can they show that growth in revenue and that EBITDA growth? And if there's free cash flow, buy it. It trades higher.
I mean, that makes more sense than earnings, which are usually massaged on the accounting side. And, the government lets companies do that so they can turn profits into losses or defer things and otherwise do that. So, I mean, the cash flow model absolutely makes the most sense.
And in crypto, it's really important because there's so much write-off of this equipment. The equipment doesn't last for the depreciation allowance, like over 3 years. This stuff can be worth half of its value in a year. So you end up having these non-cash charges. But if you use EBITDA, which is before this depreciation, it's a much better tool. So you want to be looking at, when you look at crypto mining stocks, where that revenue is growing on a per share basis, and so is the EBITDA.
All right, so I guess the big question then is, my $600 stimulus check or the $2,000 whatever the next one is, what's the best way to invest that? Or just sort of, do I just put it all into crypto, all into gold, maybe do something with the airlines? Like, what's
what I found was the new experience for me was millennials, and they predominantly learn through YouTube and podcasts. They're not going to Merrill Lynch's research analyst to get information. And so one of the things is that experience of seeing Robinhood explosion. I had an account open. So I go through the normal compliance process. Everyone at US Global opened an account at Robinhood, and we fund them all with shares of, they got a check to go and buy GoAU and Jets. And more important was the experience. Just to see it. It's a game. It's when you have a Robinhood account, it gives you 1, 2, or 3, guess a number. Oh, I got number 3. I got a share of Hecla. I got this pack. And it becomes a game. Pandui, this $250 billion Chinese company, was created by a gamer that ran, it was Microsoft in China, and then Google. One of these blessed young kids that had lunch with Warren Buffett built this incredible company. It's gaming. Yes, you can get things cheaper, but you know what the game is with this company? It is, if you want to buy something like toilet paper, it's only what you need. But if you see the price and there's a hidden number, but if you partner with me or somebody else, you can get a 50% discount. It could be 90%, it could be 10%. And so it becomes a game. And that game attracts people. Don't you, Andrew, like to get I got a deal. I pushed the button. I got this big discount. Everyone wants a discount. Everyone wants a deal. So I found that really fascinating to see this company and then that Robinhood experience of making for new investors. It's a game.
Yeah, I mean, the way people think about money, it's always one of those things where you want to see gains, you want to buy something and have it go up immediately, and then like the real world, it fluctuates. And for someone who's just getting into stocks, kind of, I mean, look, I appreciate everyone who was buying last year during the dip, because that is the advice you're supposed to follow. Like, people actually sort of set aside whatever fears they might have had and just went in with it. And it probably helps that it was also right around the time they were getting that first stimulus check, where it's just like, okay, I can't go out anymore. I'll just put some money in the stock market and see how that goes.
Well, in all our prospectuses, we write that we believe that government policies are a precursor to change. So we monitor those monetary fiscal policies. I write about it every week. Every month I talk about PMI. Purchasing Manufacturers Index in America hit 60 this week. 60.
Yeah.
That means for the next 6 months, commodities trade higher. I can go back all the congressional studies for you. We're 1 month over 3 months, and it hit 60, and it's been doing that now for 6 months. It's very bullish. So I think you're in a very interesting resource cycle that's very different. And so for investors, they're listening to these things. There's your interview, etc. All of a sudden, it can go viral. Some of these young kids, which we learned about Jets. I didn't know these kids. Like one kid, I find out he's a kid. How do I find out? Well, he's got 300,000 subscribers explaining all the different airlines all within 5 minutes. And 300,000 subscribers. He's 19 years old. Another one, he has 2.4 million subscribers. So the world has changed. Price discovery has changed. Flow of information has changed. And how do you stay relevant and young at my age, 65?
Right.
How people are discovering things and the storytelling. I find that extremely exciting.
Yeah, I mean, I'm still pretty young, but I mean, I remember looking up stock charts in the newspaper and it was yesterday's closing price. So by the time I read it, it could have been something different. And I was just getting online in the old dial-up days and you'd get like a 15-minute delay on the quote price. And I
Uh,
mean, now you can just go in and see what options are trading for and the order.
Absolutely. And so it's an exciting time. The thing, as I talk about government precursor to change, government policy precursor to change, that's very important because if Biden does raise taxes and regulations, then that will quickly impact different industries. And I think this investors can see that much more quickly. What the market's telling us right now, that's not going to happen. The market is saying that after all this drama in Washington, market trades up. So the market is a great barometer of where things are going, and the stock market is a barometer of 6 months out for growth. And same with PMI, is particular highly correlated to commodity demand. Well, commodity demand is saying they're making more motors now, and they need more copper, they need more steel. So we're in a very interesting upcycle where most of the media just can't believe it. When you follow mainstream media, they're so negative when there's just tremendous opportunities.
Yeah, I mean, I would say I'm less worried about kind of the politics than I am necessarily kind of on the monetary side, because it seems like central bankers only know how to throw money at the system when it's in trouble, and that could very easily overshoot. We didn't really get that with the financial crisis, thankfully, but I mean, this time with like the extra stimulus going to people, with just kind of bringing back all of the old tools that it took them 18 months to roll out last time in a matter of weeks. I
But
mean, is
I
is there
think
like an inflation level where you would be concerned they're overdoing it? I mean, are there any danger signs?
I think inflation is 9%. If you follow John Williams' shadow statistics and you use that simple algorithm, it just shows you, and they modified it 3 times. It's inflation's higher. So how long they can mask it, I don't know. I think the first mover advantage is buy real assets. Buy assets you need, buy them. They're going to go up. Art's going to go up. Andy Warhol art pieces, the limited supply, just like Bitcoin halving and more people buying Bitcoin, prices go up. I think that real assets are going to go through this new growth cycle in the next 5 years.
I mean, definitely the groundwork's been laid for that. Absolutely. So, I mean, you do a fair number of interviews. You're open and you talk about a lot of things. Is there anything kind of on your mind that nobody ever asks you about that you kind of wish you could talk about?
Uh, no, I think the I would say it's a fine line. Just the media is distorting the information flow. That's distorting even fund managers talking to other chief investment officers. If their fund managers are underperforming, it's because they get to listen to CNBCs of the world rather than just looking at the data. A lot of quant funds that are not leveraged, that are just quant data driven, they outperform because they're agnostic to all the political drama. COVID has been definitely a political weapon. It's been weaponized. Don't get caught up with that. Look where the opportunity is. Sadly enough, there's a hurricane in Florida. Well, insurance stocks get clobbered, but housing stocks go up.
Right.
If there's a COVID crisis, then the vaccine stocks, anyone in that space have had a phenomenal run, and anyone that can make food delivery, like Amazon has been able to push and fast track, they go up. So it's your brain, your mindset, your attitude. Like the Stanford professor psychologist, do you have a fixed mindset or a growth mindset? And the regulatory world and the political world too often have a fixed mindset, but the growth fund managers and the new innovators from medicine or technology, they have a much more growth mindset. I think that's your first mover advantage, is to have a growth mindset.
It's definitely a good place to be in. And I mean, there's so much real growth out there, even right now. And you're also just seeing a lot of people really rise to kind of the challenge of all the fear pandemic mongering and just sort of all right, I might as well start my own business. I've got nothing to lose, and I might as well, get into the stock market. I've got, like a little to lose, but not a lot. So I can always make it up again. So it does seem like, there's a bit of a shift of that really in the past year, and there is more of that mentality going on.
There is, and food delivery, anything is a delivery, logistics. I think Uber's logistics. It's digitalizing as so many different industries, but it's really a logistics, incredible piece of software. The businesses are going to do well. And delivery like Amazon. I didn't realize this though, like FedEx and Amazon and UPS, you can buy like a paper route. So you can go and buy that you've got this a quarter of, you get West Palm. You can have this quarter of San Antonio, and this is your area, and all you do is all the deliveries, and you manage that for them, and they outsource it. So I guess they don't have a union issue. It's your job. It's your paper route. As a kid growing up, I had a paper route, and I know I'd like to build it. And it's a big business. It's a great business. A person can go to the bank and borrow, but you have to know how to run logistics. So those people are really skilled at managing people and managing technology to delivery products and services and logistics. I think it's going to continue to be a boom business.
Great point to end on. It just seems like there's so much opportunity out there, and there are a lot of ways for people to get involved with that, whether, as a career or, just as an investor. So.
And Andrew, one of the things that's really important, MIT did research on this, that to have a grateful mindset and to be thankful is really key to catching opportunities and new opportunities. If you're pervasively doubting, negative, suspicious, untrusting, you miss opportunities that are gifts given right to you. And so we should be thankful. We're in the greatest nation in the world. Yes, lots of drama yesterday, but in the light compared to Venezuela, Zimbabwe, I give you, this is the most incredible country in the world, and freedom that you can't get in China, that you can't get in Russia. They must talk about the blessings and the innovation that's being taking place. And I think that's what I lend on a note. Be grateful and thankful, and you will find growth.
Absolutely. And I mean, the fact that, the USA, Canada, there's only a handful of countries that just celebrate Thanksgiving, where they just take a day just to say, let's be grateful for what we have. I think that's something that everyone should take a few minutes to do every day, and then, just go out there and follow the Frank Getty quote: work hard, strike oil.
I love it. I love it.
All right. Well, thank you for your time today.
You're my friend.
Frank Holmes. Where can people find you if they want to learn more, read more about what you have?
At usfunds.com. It's simple. Frank Talk is my blog. We publish every week. We do an investor alert, it's called, and it's a SWOT analysis. It's comprehensive but concise. 3 sentences for strengths and weaknesses, and for opportunities and threats. Last week's strengths and weaknesses, opportunity threats next week. So we try to anticipate macroeconomic data for investors to understand. So that I highly recommend. It's a good feel. It's free. We do it also because it helps us to think. It focuses us to rethink every Friday.
That's actually a good time to do that too, right before the weekend, kind of get the creative juices flowing before you're out of the office. All right. Well, thank you for the time today. And for those of you joining us at Wall Street Reporter, Senior Editor Andrew Packer here, signing off.
Thank you, Andrew.
Thank you.
That was great, Andrew.